Hello traders and welcome to another video review. Today is Monday, January 29th, 2024. Let's find out what is going on the Forex economic calendar today. When we slide down, we can notice that no very important data are scheduled for release today, and only the minor data are scheduled for release from all over the world. Of course, we got some data even from Vietnam, from Finland, from Sweden, from Norway. Nevertheless, none of this is like the major one that can impact the market participants' behavior. One of the only one important event for today is the ECB, the Guindos speech, which is scheduled for at least 10 past 2 o'clock in the afternoon. And then at the end of the London session, we got Dallas Fed Manufacturing Business Index, a 3-month bill auction and 6-month bill auction from the USA. So that's it about the data releases. So let's just switch to the major pair analysis now. We obviously start from the euro dollar. 4-hour chart of the euro dollar is revealing us virtually very limited changes from the last week. Last week's high was at the level of 1.0933, so it's still below the major technical resistance 1.1018. So right now the market is trading below 150 periods moving average, and as well below the technical now it's a resistance 1.0846. If this level here, the low at 1.0814, is violated, then the next zone awaits the best. As you can see, the momentum is not that strong anymore. Even the test of the level of the 50 on the RSI has been refused, has been capped, and the market reversed lower. So it looks like another lower low is in progress on the euro dollar, and the market might be heading lower in the later this day and even tomorrow. So it still looks like the euro dollar under the bearish pressure with a very low volatility for now. Let's switch to cable. The cable situation is quite similar. However, it is very clear that this market is moving inside of the very long horizontal correction since the last week of the December 2023. We got this last spike higher in the 28th of December, so just before the 23rd completed, and then of course, as you can see, we've been moving sideways. The key technical resistance is the swing high. The swing high is located at 1.2826. Nevertheless, there is a very nice area here. This is the supply area, supply zone. 1.2773 towards 1.2793. So it's a 20 pips intraday zone, which is very good, of course, for all of the bears, because they are capping any of the bullish attempt to rally. Recent local high 1.2757 will act as the intraday resistance just ahead of the 1.2773. The lower level of the supply zone, lower technical support, intraday technical support 1.2674. Then we have the lows of the last week 1.2648, and then we got the first level of the technical support, which is located at 1.2613. So momentum still hovering around the level of the 50, up and down, oscillating perfectly. And there is, of course, no eventual movement of the cable like to the upside or to the downside yet. No trigger, no fundamental trigger is expected just yet. We are 2 days ahead of the first month of the 2024 to be completed, so it doesn't actually look like the cable is going anywhere soon. Alright, next major, US dollar to Japanese yen, and this situation is a little bit interesting as well. Why? Because just recently we've made this very nice movement to the downside, correction of minus 1.44, which is in line with the previous correction of minus 1.40. And this correction is apparently completed already. Low 146.67. We went a little bit higher towards the 50 periods moving average. Very nice doji candlestick on a 4-hour chart with a high located at 148.32, and then we have the confirmation. Now the extension to the downside is taking place. The key technical support is there you go. Let me just take a look. 146.62, 146.26. So there's kind of a 40 pips demand zone for the bulls, and the next one is 144.97, 144.75, so it's way below the 100 periods moving average. As you can see, the momentum is hovering around the level of 50, moving up, moving down. Nevertheless, right now we are going back to test the level of 50 once again, so any breakout lower would likely extend the drop towards one of the technical support zones. So that was the US dollar to the Japanese yen. Let's take a look at the US dollar to the Canadian dollar. This situation is a little bit different because there is no lines here, so let's just do the quick analysis, quick levels here. Key technical resistance is a swing high from the 17th of the January, which is a very important technical resistance, 1.3540. So let's just mark it as a very nice technical resistance. You can see this level has been tested already in the past, so that's the one level. And the second one, I think we should put it here, is the high from the beginning of December 2023, 1.3618. so this is very nice zone for the bears. This is something that they will protect, right? We got a second attempt after this very nice bullish run towards the level of 1.3540. The high was 1.3524, so 16 pips away below the technical resistance, and then down we go. So technical support then for the down move. The technical support is located at 1.3414, and this level is the key one for the bulls, because as you can see, we bounced here very strongly, bullish engulfing pattern. Let me just zoom in a little bit. Bullish engulfing pattern, but now we are below 50 periods moving average. We are below 100 periods moving average, approaching 1.3413. Any breakout lower would likely makes the extension to the downside. The downside is located at 1.3340. 42 momentum. This momentum is kind of a different than the one that we get used to have on the majors, because this is the level of 50, right? Let me just mark it black, and we can clearly see the momentum is below the level of 50, below the neutral level, and it's pointing to the downside, which means that the bearish pressure is still active on this market, and we should expect some sort of the movement to the downside, maybe even breakout below 1.3413. Okay, so that's the outlook for the US dollar to the Canadian dollar. What else do we have here? I think we should take a look at the the Bitcoin market over the weekend. So that might be kind of interesting. So what do we have here? Very nice rebound. This is what we have here. And since that, let me just take a look. There you go. Yes, so since the lows we already made 10%. There you go. This 10%, even more, 11%. We are 11% higher from the lows of the, let me just take a look here. There you go, from the lows of January 23rd. Okay, so in the week time we went 11% up. So that's a very nice result for the bulls on Bitcoin. Let me just extend this line. So I think that because of so many tests of this line might give us some more let's say insights into the overall situation. As you can see, we hit it again. There you go. This low, bounce, almost bounce, breakout, test, new low, movement to the upside, extension, capped. The market was capped at 42,854, and it looks like we are want to go again on this line, because the bulls doesn't actually give up. So we have 42,854 local intraday technical resistance. Of course, now we trade above 50 and 100 periods moving average. There's a bullish engulfing. There's a very nice breakout here. Test of the trend line, and then it's obvious if we break above the trend line, most likely where we go is the highs of 43,500, and then we can even go and test the level of 44,355. But the momentum is now extremely overbought, so we're coming off this extremely overbought conditions, but as you can see, we still hover above the 50. So this is 100 periods moving average. So please stay focused, stay vigilant. We might have some spike to the downside to hit the level of 50, and then we will bounce. We can bounce, and that bounce might be even the bounce that will break above this internal very nice orange trend line, which is acting right now as a resistance for the price. Any breakout will be considered bullish with targets just mentioned a minute ago. So please keep an eye on the momentum behavior, keep an eye on the price behavior. It looks like the bulls are trying to regain some lost ground after the big massive pin bar reversal candle occurred on a 4-hour, of course, daily time frame chart. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.